Oh, hello. I didn't see you there. I'm Scott Fox, lifelong insurance nerd. And if you've been counting on Medicaid to pay for your nursing home someday, we need to talk. Trump's big, beautiful bill just changed the rules, and your house just might disqualify you from coverage. In this video, we'll break down what changed, who it affects, and what you can still do to protect yourself. Love him or hate him, this bill is now the law, and I am not here to debate politics. This is not a partisan video. I'm not here to cheer or criticize. My job is to help people understand what laws like this mean for Medicare recipients, Social Security beneficiaries, retirees, and anyone planning ahead. By the way, the link for the bill is in the description if you feel like reading it, if you're having problems sleeping. Starting in 2028, anyone with over $1 million in home equity, including homes with reverse mortgages and inherited property, will be denied long-term care benefits under Medicaid. So if your plan was to leave the house to your kids and rely on Medicaid, you may be out of luck. If you're middle class with a paid-off home and no long-term care plan, you're officially in the danger zone. Let's start with the big one, the home equity cap. Beginning in 2028, if your home equity exceeds $1 million, you will not qualify for Medicaid long-term care benefits. Nerd tip: home equity includes your primary residence, even if you have a reverse mortgage. It also applies to inherited property if it's in your name when you apply. This is a major change. In the past, your home was usually protected, up to a limit that varied by state. Now we've got a hard federal ceiling. And let's be real, plenty of middle-class retirees, especially in states like California or New York, are sitting on home values over $1 million, even if they're cash poor. So if your plan was to use Medicaid to pay for long-term care while leaving your house to your kids, you may need a new plan. Nerd tip: Medicaid still has a 5-year look-back period, so gifting the house now won't solve the problem. In fact, it could trigger a penalty. Now let's talk about some other changes buried in the bill that could affect your care, even if you do qualify. First, the bill bars undocumented immigrants from most Medicaid benefits, including long-term care and regular services. Emergency Medicaid is still available, but that's it. It also tightens eligibility for some legal immigrants, like certain humanitarian or parolee categories. And then there's this. The bill cracks down on provider taxes. This is a mechanism states used to draw more federal Medicaid dollars. With those loopholes closed, many states will have less money to fund Medicaid services. Nerd tip: less money at the state level could mean fewer nursing home beds, longer wait time, or stricter eligibility enforcement, even for people who qualify on paper. So what does this all mean? If you're middle class, own a home, and don't have a long-term care plan, you're now in the danger zone. You may have too much equity to qualify for Medicaid, but not enough savings to self-fund a nursing home stay. This is exactly the kind of situation that long-term care insurance, hybrid annuities, and irrevocable trust were designed for. If Medicaid is no longer a sure thing and self-funding isn't realistic for most families, you need a plan that protects both your care and your legacy. That might mean a traditional long-term care policy that kicks in when you need care, a hybrid life and long-term care plan that returns unused premiums to your heirs, or using an irrevocable trust to shield your home and stay Medicaid eligible down the line. Nerd tip: these strategies take time to work, usually 3 to 5 years or more. So the earlier you plan, the more options you'll have. And remember, long-term care isn't just a financial issue, it's a family issue. Without a plan, your kids or spouse may end up footing the bill or making decisions in crisis mode. So take the time now to explore your options, talk with your advisor, and build a plan that protects what you've worked for. If you found this video helpful, please hit that like button, share it with a friend, and drop a comment in the comments section. I'll see you in the next video. And of course, stay nerdy, my friends.